We're getting set to close out the week as we get started with a new month of trade. Looking back at the week that was, it was oil that emerged from the depths of despair, outperforming across the board and very much helped along by hopes the global economy has pushed past the worst of the coronavirus pandemic. Bitcoin has been another star this week, benefiting from renewed risk appetite and plenty of hype around the halving event scheduled to take place later this month. And while risk sentiment has been solid this week with stocks trading higher, there has been a wave of risk off into Friday, perhaps on the sense that the recovery has run a little too far and fast, and perhaps also on the back of discouraging headlines from tech giants Amazon and Apple. The Bank of Japan, Fed, and ECB decisions have all come and gone, and in the end, there wasn't much to take away from the central bank event risk, with all of the action already playing out in the weeks before as central banks were forced into taking aggressive, unscheduled action to combat coronavirus fallout. As the risk-off works its way back in on Friday, we're also seeing some of that dollar demand return, particularly against commodity block and emerging market FX. The major currencies have been holding up better, seemingly on the renewed trade tension as President Trump turns the heat up on China, blaming Beijing for COVID-19 and threatening to use tariffs as a retaliation measure. Key standouts on today's calendar include UK manufacturing PMI reads, UK consumer credit net letting, Canada manufacturing PMIs, US ISM manufacturing, and US construction spending. It's worth noting that a good chunk of Europe is off on Friday for public holidays. That's all for now.